Welcome to the Deep Dive. Today, we are taking a bit of a different look at online commerce. We're going behind the scenes, really.
Yeah, we're diving into a company that most people probably haven't thought much about, but it's huge. Copart Inc., CPRT.
Right, Copart. They're essentially the massive engine remarketing the world's salvage and used vehicles. Most of us might never directly use them.
Probably not directly, no. But if you've ever had a car declared a total loss by insurance, you've indirectly interacted with their whole system.
Exactly. It's this hidden giant.
And our source today is, well, it's pretty dense. It's Copart's 10K filing, the annual report, for the fiscal year that ended July 31, 2025.
Right, the 10K. Not exactly light reading.
Definitely not. But it's basically an instruction manual, How to build a global powerhouse by digitizing, well, wrecked cars.
And the scale is just staggering when you look at the numbers. Fiscal 2025, they pulled in, what, $4.6 billion in revenue?
That's right, $4.6 billion, and even more impressive, $1.7 billion in operating income from that.
Wow. Okay, so that tells you straight away, this isn't just some local tow yard running online auctions. This is something else entirely.
Oh, absolutely. They frame themselves as the leading global provider of online auctions and vehicle remarketing. Think of them as the essential middleman.
A middleman between who and who?
Between sellers who need to get rid of a damaged or used vehicle quickly, mostly insurers and buyers all over the world who actually want that vehicle.
For parts, or maybe to fix up.
Exactly. Dismantlers, rebuilders, dealers, they create the market. They provide the liquidity, as they say.
Okay, so let's break that down. The anatomy of a wreck, you could call it.
Yeah.
This business needs a constant flow of cars, right? Where's the supply coming from?
Yeah, inventory is everything. And the supply side is very concentrated. The overwhelming majority of the filing says 81% in fiscal 2025 comes straight from insurance companies.
81%. So these are the total loss vehicles.
Mostly, yes. Cars damaged beyond economical repair, or maybe stolen vehicles that were recovered later. The insurance company pays the claim, then gives the car to Copart to sell off and recoup some value. It's a very symbiotic relationship.
Makes sense. Insurers aren't in the business of storing and selling wrecked cars.
Precisely. But it's not only insurance. They do source elsewhere, too.
Like where?
They mention getting vehicles from car dealers. Banks think repossessions. Finance companies, big fleet operators.
Fleets, okay. Like rental companies, maybe?
Could be rental companies, corporate fleets, yeah. And even from individuals, actually. They have a direct-to-consumer thing called cash4cars.com.
Ah, interesting. Diversifying a bit.
A little, yes.
All right.
But those big long-term contracts with the insurance giants, that's the core. That's the lifeblood of the supply side.
Okay, supply secured, mainly from insurers. Yeah, who's buying all this? You said a global marketplace. Who are these customers?
It's quite a specialized crowd. The single largest group, by sheer volume, are licensed vehicle dismantlers.
So scrap yards, basically.
Yeah.
People pulling parts.
Pretty much, yeah. Buying cars just to harvest the parts. Then you've got rebuilders, repair shops, used car dealers, and then the really critical group, exporters.
Exporters. Okay, tell me more about that. How global does it get?
This is where their tech platform really shines. It turns local salvage into, global commodities. The numbers are pretty wild.
Give me a stat.
Okay, for their U.S. sales in fiscal 2025, get this, almost 70%, 69.8% of vehicles by unit were sold to buyers outside the state where the car was located.
Wow. Okay, so not local buyers.
Not primarily local, and even more striking, 38.8% of those U.S. units went to international members, buyers outside the United States.
Nearly 40% are exported.
Directly exported through their platform. So think about that. Over a third of the wrecked cars flowing through their U.S. yards are instantly heading overseas. They've built a global trade route for totaled vehicles.
That's actually incredible. A commodities trading platform for stuff most people think is junk.
Right. But it's valuable junk to the right buyer, wherever they are.
Okay, but how do they actually make money on these transactions?
Yeah.
The $4.6 billion, it's not the same for every car, is it? There's some nuance in the business model.
Correct. There are two main ways they operate, and it depends on the country.
Okay.
Primarily in places like the U.S., Canada, Brazil, most of their markets, they use the agency model.
Agency model, meaning?
Meaning they're just the agent. They connect the seller, like the insurer, with the buyer. They never actually own the car. Their revenue comes purely from fees, auction fees, service fees, storage fees maybe.
Low risk for them then. No inventory cost.
Exactly. Minimal inventory risk. But then there's the second model.
Which is?
The principal basis. They use this mainly in the UK, Germany, and Spain.
Principal basis. Sounds different.
It is. In these markets, sometimes because of regulations or maybe to win specific contracts, Copart actually buys the salvage vehicles themselves outright.
Oh, okay. So they take ownership.
Yes. They buy it, then they resell it for their own account, so they're taking on inventory risk there.
And that changes how the revenue looks on their books.
Big time. Under the agency model, revenue is just the fees. Under the principal model, the entire sale price of the car counts as revenue. But it also means they carry the inventory on their balance sheet, they bear the risk if the price drops, it's more capital intensive.
So they use that riskier model strategically in certain key markets.
Seems that way, probably necessary to compete or comply in those specific countries.
Okay, interesting distinction. Let's shift gears to the technology. Because managing 281 facilities globally, that requires some serious tech backbone, right?
Absolutely central to everything they do.
And the core seems to be this proprietary auction platform. Virtual bidding third generation, or VB3. Is this just a fancy website, or is it really their competitive advantage?
Oh, it's the advantage. It's definitely the moat, as they say. VB3 isn't just a website, it's an internet-only virtual auction system. That internet-only part is key.
How so? What does VB3 actually do differently?
It's got this really efficient two-step bidding process. First, there's an open preliminary bidding phase. You can put in your max bid, kind of like eBay, using their BID4U proxy tool.
Okay, standard online bidding.
Right. But then it moves to a live, real-time, internet-only virtual auction. All bidders compete simultaneously online. No physical auction floor needed.
Ah, so no need for people to physically show up anywhere.
Nope. And that has two huge advantages. First, it dramatically cuts down their costs. Think about it. No need for big auction halls, fewer staff needed on site for the sale itself, saves a lot on CapEx.
Makes sense. Cheaper operations. What's the second advantage?
Price maximization. Because it's virtual and global, you get way more bidders competing for the same car at the same time. The dismantler in Dallas is bidding against the rebuilder in Berlin, who's bidding against the exporter in Dubai.
All in the same virtual room.
Exactly. More bidders means more competition, which generally pushes the final sale price higher. And that makes the sellers, especially those big insurance companies, very happy. It gets them a better return on their totaled asset.
Right. Better recovery value for the insurer keeps them loyal to Copart. Clever.
Very. They've basically created a global price discovery engine for wrecks.
But it's not just the auction tech, is it? They've built tools specifically for the sellers, the insurers, to kind of lock them in.
Oh, yeah. They have a whole suite of software aimed at making life easier for insurers and integrating Copart into their workflow. They highlight three main ones in the 10K.
Okay, what are they?
First is Co.ai. That's their proprietary AI machine learning computer vision tool.
AI for wrecked cars. What does it do?
It gives instant salvage value estimates. So an insurer inputs info, maybe photos, and the AI predicts what the wreck is likely worth at auction. This helps them decide much faster. Is this car a total loss or should we repair it?
Okay, speeding up the crucial total loss decision. That's valuable.
Hugely valuable. Then there's IntelliSeller. This uses all their historical sales data to automatically suggest things like the optimal minimum bid for a vehicle, or even if it should be relisted later for a better price.
Automating the sales strategy, essentially.
Pretty much. Trying to squeeze every last dollar out for the seller. And finally, there's Copart Access. This is more like an online portal, a dashboard.
For the insurer to use.
Yeah. It lets insurers track their inventory at Copart, manage all the complicated title paperwork electronically, get real-time data, run reports. It plugs Copart right into the insurer's claims system.
So they're embedding themselves deep into their key clients' operations. Almost like a software provider, too.
Exactly. It's a service and a software play. Makes it harder for insurers to switch providers.
And what about the buyers? Any tech aimed at making their lives easier, especially those international ones bidding unseen.
Yes, definitely. They push Copart 360, or C360. This uses special tech to capture really clear, high-def, 360-degree photos of the inside and outside of the vehicles.
Like a virtual walk-around?
Kind of, yeah. If you're bidding from halfway across the world on a car you can't physically inspect, seeing those detailed 360 views gives you a lot more confidence. Reduces the perceived risk.
Makes sense. More confidence equals higher bids.
That's the idea. They rolled it out a few years ago and specifically mentioned expanding it to the UK in fiscal 2021. So it's clearly important for those global buyers.
Okay, let's talk physical scale again. All this tech needs places to actually store and process the cars. How big is their footprint?
It's Genuinely massive. The 10K lists 281 operating facilities total,
281. Wow, where are they?
spread across 11 countries. The big ones are the US and the UK, obviously, but also Germany, Brazil, Canada, the UAE, Spain, Finland, Oman, Ireland, and Bahrain.
A truly global network of yards.
Yeah, they need that physical presence to serve those global insurance contracts effectively wherever the accidents happen.
And they're still adding more, right?
Yeah.
The growth strategy isn't just tech, it's also land.
Definitely. They're constantly expanding. It's a mix of building new sites themselves, organic growth, and buying up smaller competitors or yards.
Any recent examples?
Yeah, the filing mentions specific new facilities opening just in fiscal 2024 and 2025 in places like Glasgow, Scotland, Barcelona, Spain, and domestically, Chicago, Illinois, and even Casper, Wyoming.
So constantly needing more space, more
Yeah.
capacity.
You have to. Especially with insurance contracts, you need to guarantee you can handle their volume, even if there's a surge.
And they're also growing by acquiring companies that sell different kinds of things, not just cars. Diversifying.
That's a key part of the recent strategy, yes.
Yeah.
Moving beyond just passenger cars and light trucks, they bought national powersport auctions, for instance.
Power sports. Like motorcycles, RVs.
Exactly. Motorcycles, ATVs, RVs, boats, generally higher value items too, a different market segment.
And there was another big one recently.
Yes, in fiscal 2024, they acquired Purple Wave Inc. That's a big move because Purple Wave specializes in online auctions for heavy equipment.
Heavy equipment, like tractors and bulldozers.
Yeah, agriculture equipment, construction machinery, trucks from large fleets. It's a significant expansion into totally new adjacent remarketing areas. Broadens their addressable market considerably.
Okay, growth through expansion and acquisition. But what about the risks? This business seems exposed to some pretty big external forces.
Hugely exposed, especially weather.
Also, more accidents and bad weather.
Partly that, yeah. They do note seasonality, generally higher volumes in winter months due to more accidents. But the real volatility comes from major weather catastrophes. Hurricanes, massive floods, things like that.
Ah, right. Suddenly, thousands of flood-damaged cars hit the system.
Exactly. The 10K specifically calls out Hurricanes Helene and Milton in the fall of 2024. They said these events caused substantial additional costs and really strained their facility capacity in those affected areas.
So they need massive surge capacity just sitting there for the unpredictable.
Pretty much, it's a cost of doing business in this space. You have to be ready for the next big storm.
Okay, weather is a big one. What about economic factors, like the price of used cars? That must affect them.
It does, but maybe counterintuitively.
How do you mean?
Well, when used car prices are really high like they have been in recent years, insurance companies are actually more likely to repair a damaged vehicle rather than declare it a total loss.
Oh, because the car's value is high relative to the repair cost.
Exactly. So really high used car prices can actually reduce the number of total loss vehicles coming into Copart's system. It reduces their supply volume.
So paradoxically, they might do better when the used car market cools off a bit.
Generally, yes. When used car values drop, the threshold for declaring a total loss is reached more easily, which means more volume for Copart. It's a weird dynamic.
That is fascinating.
Yeah.
Okay, what about their own costs? Anything specific mentioned?
Fuel costs are a big one, specifically how they relate to transportation and these things called PIP contracts, Percentage Incentive Program. It's a common type of contract they have with the big insurers. Under some PIP deals, Copart might agree to absorb the cost of towing the vehicle as part of their overall service fee.
Okay, so what's the risk?
The risk is that if fuel prices suddenly spike, which they definitely do, Copart might be stuck eating those higher transportation costs because they can't immediately pass them on to the insurer under the terms of the PIP contract.
Ah, so unexpected fuel hikes can squeeze their profit margins directly.
Correct. On a potentially large chunk of their business.
Okay, so pressure from used car prices affecting supply, pressure from fuel costs. Who are they competing against for those crucial insurance contracts?
There's direct competition from other big auction players. The main one named is RB Global, who owns Insurance Auto Auctions, or IAA. That's their big rival.
Auction house versus auction house.
Right. But there's also a more structural threat. Large vehicle dismantlers, the filing names, LKQ Corporation specifically. They're huge, sometimes try to bypass the auction companies altogether by going directly to the insurance companies or fleet operators and offering to buy the salvage vehicles directly from them, cutting out the middleman, Copart.
So disintermediation. trying to control the inventory source themselves.
Exactly. It's an ongoing battle for who controls that flow of salvage inventory.
Okay, final area. Digital and compliance risks. We know they're a tech platform. What keeps them up at night there?
Well, the obvious one is cybersecurity. They mention needing a robust hybrid infrastructure for redundancy, which makes sense. They also did disclose an incident.
Oh, what happened?
In March 2023, they said an immaterial subsidiary suffered a ransomware attack. They say it was contained and didn't have a material impact, but it highlights the constant threat environment they operate in.
Right. Ransomware is everywhere.
Yeah.
But you mentioned compliance risk, too. Something about the Department of Justice.
Yes, this seemed pretty significant. The 10-K notes an ongoing investigation by the U.S. Department of Justice.
DOJ investigating a car auction company. For what?
Potential violations of money laundering laws.
Money laundering. How does that connect to selling wrecked cars?
It connects directly back to that huge international buyer base we talked about. Remember, nearly 40% of their U.S. volume goes overseas.
Right.
The concern, presumably, is whether their platform could be used by bad actors to launder illicit funds. Quickly buying up vehicles, perhaps with dirty money, and exporting them to effectively clean the funds.
Using high-value, easily movable assets.
Exactly. So the DOJ is looking at the practices and procedures for preventing and detecting potential money laundering activity by the members using their auction platform.
So their very success in creating this global marketplace creates this complex financial crime risk.
Precisely. It means they need really robust compliance systems, know your customer checks, transaction monitoring.
Yeah.
Especially for those cross-border sales, it's a major regulatory headache that comes with that global scale.
Wow. Okay, that really ties it all together. The tech, global reach, the risks.
It does. It shows how their tech advantage is a double-edged sword, drives huge profits, but also creates these digital and regulatory vulnerabilities.
So wrapping up this deep dive, the big picture on Copart is they fundamentally changed the salvage game using technology, right? VB3, Co.ai, creating this massive global liquid market for damaged vehicles.
Absolutely. They replaced physical auctions with efficient virtual ones, built tools to lock in their crucial insurance partners who supply the cars, and just kept expanding globally.
But heavily reliant on those insurers.
Totally reliant. And now facing these complex digital era risks, which leads to maybe a final thought for you to chew on. For a company that's mastered digitizing physical wrecks globally, their future success might actually depend less on the ups and downs of the physical car market itself.
And more on.
More on how well they navigate the purely digital and regulatory challenges. Can they stay ahead of cyber attacks? Can they satisfy regulators on complex issues like money laundering prevention? And critically, can they maintain enough physical yard space to handle the sheer volume when the next Cat 5 hurricane makes landfall? It's that blend of digital risk and raw physical capacity.
Managing the digital world while still dealing with thousands of tons of twisted metal. A fascinating balancing act.
Indeed.
Well, you now have a much clearer picture of this hidden giant, Copart. Thanks for joining us for the deep dive.
See you next time.